Okay, perfect. So good morning. Thanks very much for joining the webinar this morning. Hopefully it's going to be a pretty applicable topic for everyone at the moment. There's a lot of talk regarding China and a lot of movement with businesses in the UAE and China at the minute. I'm joined today by Isabel. So she will be running through the second part of our presentation, and we'll do quick introductions now just so you guys are all aware of who's doing the webinar. So my name is Daumantas. I'm the country manager for the UAE, and I've been looking after the ebury operations in the UAE as country manager for the last year and a half. This morning we'll run through a little bit about ebury, but mainly we're going to focus on the topic of what is happening with China, what is happening with trade between UAE and China, and how businesses are able to leverage the capabilities that we can offer when they are dealing with China. Isabel, I'll let you do a quick introduction.
Yeah, thank you. Hi, everyone. So I head up the China West initiatives at ebury, and during the last 4 years, one of my main focus has been to assist our clients in the West and their suppliers in China to transition into RMB and make their cross-border trade more efficient. So I'm actually very excited today to be able to share with all of you guys the insights that we've accumulated in these years. So yeah, you'll be a pleasure. Awesome.
Perfect. All right, so let's kick off. For those that maybe don't know, we'll start with a quick introduction of ebury. So we are a fintech that focuses around international payments. We are in around 20 different countries now with 23 offices. In the UAE, we are based in the DIFC in Dubai, and we've been there now for the last 3.5 years. Really, our offering is to come in and help SMEs in a way that a bank would help its larger corporates. That's with additional services, it's with giving them access to quality products, and just giving them a little bit more attention and guidance when it comes to the markets, rather than just simply providing an exchange rate, when a client calls. We're working with around 30,000 or over 30,000 businesses around the world, and we are backed by very well-known investors, of which Santander is one of our largest and most prominent. Santander is the largest bank in Europe, and they made a substantial investment into the business in 2019. A little bit more in terms of Santander. So, this was quite a strategic investment for the business, and it was a great validation for our business because it showed the wider market, our clients and our prospective clients, that our business is one that is recognized to be a leader in its field. So as mentioned here on the slide, they invested 350 million pounds into ebury, and it's part of a wider strategy for Santander to expand into new markets and to expand into the SME space in an effective way, whereas they're doing that through ebury instead of simply themselves. So this was a great moment for us, and it's been a good journey so far. We've been able to leverage a lot of capabilities and a lot of learnings from Santander, and it's something that's helping us move into new markets such as Latin America. So we're very excited at what's been happening so far, and what will continue to be a fruitful partnership. In terms of our summary of what we really focus on for clients, first and foremost, it's going to be around service. When we work with small to medium-sized enterprises, we really want them to feel like we are understanding their business and we're giving them the right type of suggestions depending on their situation. So the service element comes in the shape and form of having your own personal dealer. Specifically for China relations, we have a team that is designated and able to speak to your suppliers in the local language. They're also very well versed about local regulations. So again, we can give you that kind of learning so that you don't have to go out into kind of the wilderness and find all that information yourself, because sometimes it can be quite challenging, especially with a language barrier that exists for many countries with China. Then if we go more specifically into some of the products, so multi-payments and payroll, this is something that we are growing in the UAE quite quickly. We have a mass payments team, and it allows us to leverage the technology that we have to make operations for businesses a lot quicker. You know, rather than inputting payments one by one or focusing on, you know, giving a Excel spreadsheet that an operations team would have to go through one by one, you're able to utilize our technology to be able to make hundreds of payments in one foul swoop through the system. And then probably one of our most important products is around hedging. And when it comes to CNY in China, this is an area we're very, very strong, because we've been focused on China for a number of years, and that focus has allowed us to grow very good partnerships with liquidity providers to be able to provide liquidity into China. That's both in the form of onshore and in the form of offshore. And that's something that businesses in the UAE are really able to leverage with ebury, because many of the local banks and certainly the exchanges are not able to offer CNY local currency payments, whereas ebury has been doing this for a number of years. And not only are we able to provide, you know, access to local currency, you're also able to hedge that local currency. So that's, you know, just a quick kind of overview of exactly what products we offer and which are the most kind of significant, certainly in the UAE. Now, here is just a little bit kind of more information about how big the opportunity is between UAE and China, but it's also here to highlight that the trade with China from the UAE is only going to grow. So what we really want to, you know, give customers and businesses who are joining the webinar is a clear idea of understanding exactly how big the opportunity is going to be and what is the best way to do business with China. So you can see the kind of stats that we're talking about. The numbers are, you know, pretty substantial. There's a few kind of top exports, no surprise, from the UAE. It's crude petroleum, but these numbers, if you look a couple of years ago, are only growing and growing more. And we expect that trend to continue as China continues to grow. And the UAE is a good trade partner for them. So understanding how to work with their local currency, with local legislation in China is very important. And that's exactly where we can come in and guide clients a little bit more about. Then we move on to the market analysis of what's been happening in China. And this is kind of the beginning of the core part of our presentation, which we want to make sure is as informative as possible for you. We start in terms of the performance versus USD, GBP, and the euro. So as we can see, over the last 2 years, CNY has strengthened in different amounts between different currencies, but most substantially for the US dollar, it has strengthened by just over 10% from the highs of around 7.1. So what does that mean for customers that are looking to work with China? Well, very simply, what it means is if you were paying China in USD in, let's say, May 2020, when that supplier receives the USD, they receive a decent chunk of CNY. That's probably where they price their goods at, and everyone is happy. However, when we move lower to the level of 6.4, that same USD that you are sending to your supplier is now giving them less CNY. So there's a couple of things that will happen at this stage. The supplier is not going to continue to take a loss if they price their goods at a higher price than 6.4. So therefore, it's probably very likely that an imminent rise in the goods that you are purchasing from China is coming. And the issue with this is that if the supplier is in constant control of how the goods are priced from a CNY perspective, that means that you do not have as much transparency. And when the moves are as strong as what we've seen with USD CNY of 10%, these price increases could be quite substantial. And if you do not know they're coming, that could be quite damaging because it might make you less competitive in your space. It might price you out of the market, and so on. Then we come to US-China relations. So this, I mean, has been a ongoing topic for years and years. And of course, you know, it's just jousting between two of the world's biggest economies. Most recently, we have seen some, you know, political spouts where delegates are not meeting each other in China, or China is not allowing their top delegates to meet with the top delegates from the US. Basically just flexing its muscles to say, look, you know, if you're not trying to take us seriously, you know, we're not going to have a good conversation with you. And what that has led to is a couple of weeks ago, President Biden from the US actually himself directly spoke to Xi Jinping, and he was able to, you know, have a productive conversation as far as the media tells us. But it just shows that if you're dealing with China, you know, talking at a top level is the way to do it. And when we saw that conversation happening, as you can see in the chart, we saw that CNY strengthened. It was breaking out. Well, it looked like it was going to be breaking out of the tight 1.3% band. But actually it rebounded a little bit more to around the levels of 6.47. And we'll talk a little bit more about what kind of has been driving that later on. But this relationship with the US and China is really a crucial one. You know, it doesn't take a rocket scientist to see that, but it's always important to make sure that our clients have a good idea of where those relations are and what information they should be following. Then just before I start on Evergrand, which is a topic that probably a lot of people are reading about at the moment, I think it's important to note that during August, there was a number of data releases from China, which came in at lower than expected. And that has kind of driven the market to take a little bit of a risk-off approach with China, because they're feeling that, okay, you know, with higher commodity prices, off the back of COVID and a bit of a slowdown in China, could GDP slow down? So, you know, people pull out from their assets in CNY, and we see that USD relative to CNY might strengthen. And this is where the Evergrand story comes in, because although it's a very, you know, sensational story about a huge property developer with a huge amount of debt, it just kind of coincides with that message of, you know, is there a slowdown? Because they provide housing to the Chinese market. And if people are not buying houses at a particular, you know, cost, that is usually a good indicator that the economy is not quite moving as quickly as possible. But with regards to Evergrand, I think the big question is it a, you know, systemic or a national risk? Currently, the company has a huge amount of debt, rumored, you know, to be between 300 to 600 billion, which it may not be able to service. Now, a lot of banks will be holding that type of debt. And so the question is, you know, if they do go bust, what happens to these banks? You know, will they suffer? Will there be a kind of domino effect? I think the main thing at the minute that we are seeing is that if there is an event around Evergrand, it will probably lead to banks closing off credit lines. Now that may, you know, close off the lifeblood of a couple of businesses. That may lead to them going bust, and that so creates a more systemic issue. But right now we don't know. The events so far have kind of shown that losses for the banks could lead to those credit lines drying out. A lot of financial institutions are coming out having exposure, but mostly the Asian banks are going to have the biggest chunks. And as I said at the beginning, it's an additional indicator that China is slowing down. If, you know, the housing is not coming out of the market or coming off the market, then it's going to cause issues. And then Thursday, today, is a key date to see exactly what will happen, because they have two bond payments, which is one for an onshore bond and one for an offshore bond. So it's something to watch. And of course, here you can see the chart for the stock of the company, which is, you know, quite a substantial drop. So where next? This is kind of, you know, all the information where we have what we have available to us now. So now we look at a bit of a forecast from some of the largest banks to show you exactly where they feel the market is going. So if we look at the mean, which is effectively just the average of all the predictions from all of these banks, we kind of get a bit of a sense of what the expectation is. And to be honest, right now, it looks like, we continue trading in this tight band that we're seeing. But when it goes a little bit into the latter years, 22, 23, there is expectation that CNY will strengthen further. How much further? That's questionable. China is an exporter. It doesn't want to have its currency being too strong. But if you are growing at double-digit growth, it's only going to attract more and more investment, which means more demand for CNY. So this is kind of the expectation of what we're seeing. And it just shows that, having a firm understanding on CNY and how you can deal with CNY is very important, because the adoption for CNY is going to be growing, and the currency is going to be likely fluctuating more and more. So this kind of concludes the parts in terms of my side. I'll just hand it over to Isabel. I'll stop sharing and she can start sharing from her side.
Thanks a lot, Dee. So, okay, let me start sharing my screen. Meanwhile, I want to give you guys a quick reminder. You can see that there's a button at the bottom that says Q&A. So we want to encourage you to ask us whatever questions that you have, especially like hard questions. And if we don't have the answer, then we'll definitely come back and then follow up with you. And also we'll be leaving time at the end of our session. So yeah, whilst I'm presenting, feel free to put any questions on the Q&A. I wanted to start my part first to go a bit into detail into renminbi, CNY, and why do you see that the Chinese currency has different denominations. So throughout my part, you will see that I will always call the Chinese currency as renminbi yuan. So that is RMB, and that's the official name of the currency in China. However, in terms of the trading in the foreign exchange market, it receives different denominations. So CNY, that refers to the onshore currency that is traded purely within China. So that means mainland China, excluding Hong Kong and Macau. So this is actually not a free float exchange rate. The exchange rate is fixed on a daily basis by the Central Bank of China. And you can only access to this exchange rate inside mainland China. Then we have, sorry, so let me stop for a bit. Can you guys see my screen properly?
Yeah, it's okay now. It's okay now.
Okay. Okay, yeah, sorry. So let me continue. In terms of the first column, CNY, I was saying that you can only tap into the onshore liquidity if you're a financial institution inside China. So if we go on to the offshore part, right? So if you are outside China, how can you access the liquidity and the exchange rate of the RMB? So you have the CNY non-deliverable, which is purely outside China, but all the settlements are done in USD instead of RMB because it's non-deliverable if it's CNY. And then last but not least, you have the CN8, that is the free float currency that is fully deliverable outside China. So that it's not, the rate is not fixed. It goes by the market forces, but because you have a lot of financial institutions that access both CNY in China and then CNH outside China, effectively the CNY and the CNH rate, there's always like a very small difference, but it's not like super relevant. So from Ebury's side, because we're an offshore financial institution, we actually only have access to the CN8 liquidity. But what happens is that even though you can only access to the foreign exchange rates in CN8, once you send the CN8 from outside China into China, it converts automatically into CNY at a rate of 101. So if you send CNH directly from abroad, you don't need to worry about any exchange rate differential between CNH and CNY. So having said that, let me go on to my next slide. So we want to show here what has been the evolution of the dollar CNY spot rate in the last 10 years. So previously, you can see that most of the international trade, it was settled in USD. And actually, for a lot of Chinese suppliers, they much prefer to invoice their clients in the West in USD because that was considered the strong currency. But then we have seen in the last 5 years, especially, how China has embarked into a process of internationalization of its currency. And we're seeing more and more double side volatility in terms of the fluctuation of the dollar CNY rate. So some milestones that I want to highlight here. It's October 2016. That was when the Chinese currency, RMB, were added to the basket of special drawn rights currencies of the International Monetary Fund. So from that on, if you look at the right side of the chart, you will see how we've been seeing more and more volatility in this exchange rate, which obviously is also impacting the cross-border trade between China and the West. So here you can see a bit of what has been the major milestones in this process of internationalization of RMB. So I've already highlighted the IMF event in 2016. Also, inside China, we have seen also how the local authorities have been trying to promote the use of RMB more and more in the cross-border trade. So in the milestone number 5, January 2018, the Central Bank of China, PBOC, actually issued a guideline to encourage corporates to use RMB for cross-border transactions. And through the last 12 months, since 2020, where we see quite a big appreciation of the RMB, both the Prime Minister of China and the central bank representatives, they've all come out encouraging corporates in China to either take more hedging measures or to consider transacting directly in RMB with their overseas counterparties in order to avoid the foreign exchange risk, since the RMB would experience more and more double side volatility. Then in the milestone number 7, that I want to highlight as well, as of December 2020, there was a notice issued by the different authorities in China, where one of the items that were in there was to improve the way the suppliers in China could receive RMB directly. So to explain this quickly, right? Previously, when the suppliers were exporting in USD directly, because this is something that they've always been doing, for the banks, it was like pretty straightforward. The supplier itself didn't need to submit a lot of information, and the bank will automatically debit those USD into their account. But then because receiving cross-border RMB was still like a new trend for them, the banks were actually asking for a lot more documentation when the suppliers wanted to receive overseas CNH. So this guideline, the purpose is to simplify much more the paperwork that is required for the suppliers when receiving RMB directly, so that they can also submit electronic documentation and avoid some of the paperwork hassle. Because of this trend that we've mentioned, we're seeing how our buyers and their suppliers in China are increasingly turning to transacting into RMB. So what are the reasons for both parties to consider switching from USD into RMB? So from our buyer side, right, the first and main reason is to avoid the one-way risk. This I will explain in my next page with a case illustration. But basically, for the buyer, if they are able to get their suppliers to receive RMB directly, that will give them more control on how they manage their own exchange risk. Because what we've experienced with the suppliers is that most of them in China, they are not really hedging themselves. So it is on the buyer if they want to take any foreign exchange risk management tool. So they make sure that they're not impacted by negative movements in the exchange rate. And also for the buyer, because the supplier, their base currency, and most of their cost base is based in RMB, which is the local currency, this is the way for them to get the best base price from the supplier side. Then in terms of the supplier, right? the main reason for them to start invoicing in RMB, it's of course because of the double side volatility that they're seeing more and more within the dollar RMB. This is something that they were previously not really used to. So we've gone through like a few years of RMB being quite weak versus the USD. So for the suppliers, it was good times that they were receiving USD and they were able to exchange it for more RMB. But this has changed since 2020. So right now, the suppliers are more and more concerned about the negative impact of the exchange rate. And also they're more open to consider RMB as a way as well to avoid difficult conversations with their buyers about, look, I might need to increase your prices, not only because the increase in the raw materials, but also because of the impact of the exchange rate. Because for one USD, I can exchange much less RMB. So this is what I want to illustrate in this real case example. So I was mentioning previously about the main reason for buyers to pay in RMB is to protect themselves against this one-way risk. So here you can see the evolution of the dollar CNH during 2020. So if you're a client, right, that at the beginning of 2020, you ask your supplier for prices. So at that time, the market rate was $1 per exchange for 6.97 RMB. And normally, based on what the suppliers have been telling us, they wouldn't directly give you USD prices converted from RMB based on the market rate. They will always keep a little buffer for themselves in case there are small fluctuations in the exchange rate. So before 2020, most of the suppliers, they've been using an exchange rate of around 6.8, which if we go back to January 2020, that would give them immediately an additional buffer on top because they are, so let's say this is a product that to make it easy costs them 680 RMB, and that's the price that they would be willing to sell. So they would convert it to USD at 6.8 and they would tell the buyer, so now you need to pay me 100 USD. But effectively, when the buyer pays 100 USD, they'll be able to exchange it for 6.97 and get 697. So 697 yuan versus 680, they're effectively immediately receiving an additional profit on these 17 yuan purely because of the FX rates. So if you look at the gray bubbles that are at the bottom, those bubbles are showing what is the additional margin that the supplier was earning in the first half of 2020 because of the positive exchange rates. So if you look at the peak in May 26, actually, one USD could exchange as much as 7.17. So if I ask a lot of our buyers at that time, did you get any price decrease from the supplier? I'm sure most of you would answer that no. Obviously, like the supplier was keeping it to themselves most of the times. And they was also saying, look, I have increased in my factory costs, machines, so on and so forth. So this additional margin that I'm earning, it's really to compensate that. So they will give all sorts of reasons to really not increase, not give the buyers a discount. But then we see how the situation changes, started second half of 2020. So as of September 15, suddenly the supplier not only cannot get for one USD 6.8, which was their budget rate, but now they're getting 6.75. So now we have a problem, right? Because the supplier now is losing money. So what they will do is that instead of the previous price of 100 USD, they will effectively increase it to 105 so that they can bring back their margin that went from minus 1.5% into a positive range again. So what do we see here? That when there are favorable exchange rates for the supplier, then the client doesn't really share the benefit of better exchange rates. But then when the situation changes and then the exchange rate is working adversely and negatively towards the supplier and making them lose the margin, the supplier is not saying, okay, so because I previously earned the margin, now I'm gonna assume the loss as well. No, they're actually sharing the loss with the client. So then for the buyer, would actually be much better if from the beginning, the supplier is, instead of giving them 100 USD, they would have told them, okay, so my price is 680 RMB. And then the buyer could be able to decide how and when they want to hedge and do the risk management tools, and also to be able to profit from the volatility of the exchange rate markets. Because the situation in September was 6.75, but we've seen how the RMB has continued appreciating. So end of last year, we're at 6.5, and currently we're around 6.47, but it was already a bit better than previously. So that's why we feel that if the buyer and supplier could invoice directly in RMB, that could have saved them part of the cost increase because of the negative exchange rates. So what are the factors that the suppliers consider when the clients ask them about receiving RMB, right? Because some of our buyers, they might have popped the question before to the supplier and the feedback wasn't very positive. So based on what we have seen, right? For the suppliers, hedging is one important reason because they have limited access to foreign exchange risk management tools in China. For a supplier, if you want to do hedging from the bank, first you need to make sure that you have a credit line with the bank and that you're not gonna use that to borrow money. Because if you do hedging with your bank, then that will consume your credit line, and effectively, most of the suppliers, they're more interested in liquidity and borrow money from their bank rather than doing hedging. And in China, you can only access hedging through the banks. There are no fintech companies like us that could offer this service. Also, the hedging that they offer is very limited flexibility. So it's always a fixed hedging that doesn't give you flexibility to choose when you want to exchange from dollar to RMB. So effectively, most of the suppliers, they're exposed to the market movements of the dollar RMB exchange rate. Then depending on where the supplier is located, we have seen that the ones that are in the major export hubs, so we're talking about Guangdong in southern China and Zhejiang, which is in eastern China, suppliers that are based from those regions, they are a bit more familiar with invoicing in RMB, and it's not something that new for them. In contrast, we have found a bit more resistance more towards the inner regions and also the northern regions like Shandong. Then in terms of the price negotiations in RMB, so because for the supplier, it's also a change in the way they operate. If you're a client that has a stable relationship with the supplier and you're moving good volumes with them and also planning to increase the volumes, they're more willing as well to adapt to the client's need and more open to negotiate better prices in RMB. And we have found that even though right now it's not a widespread practice that across the West, the clients pay directly in RMB to China, we're already seeing some other countries that are switching to RMB with when trading with China. So let's say Russia and other developing countries in Southeast Asia are already transacting in RMB, and some suppliers, they've already confirmed they've been receiving RMB from those countries. Then last but not least, in terms of the industry, in general, most of the suppliers that we've talked to across the different sectors, they're open to consider invoicing in RMB because they can see the benefits for both themselves and also their clients. But we have identified, for instance, certain industries where, because the raw materials are actually mostly sourced from abroad and are in USD, they are quite reluctant to switch to RMB. But those are like isolated cases. The one that we found most relevant were the automobile wheels industry, because the rubber is sourced from overseas. So effectively, the suppliers were pricing in USD as their base price. So finally, I would like to cover as well what are some common issues that as an importer you could encounter when trying to switch to RMB with your supplier. The first one is suppliers saying that they cannot get tax refund if they receive RMB. So that's one of the main questions that we get from the suppliers. But I have to say that this was especially relevant previously, like 2-3 years ago, because still like transacting in RMB with overseas clients wasn't that widespread. And suppliers had this misconception that if you export in RMB, which is their local currency, they won't be able to get their VAT refund. So how this works is that for any product that you manufacture in China, you need to pay a VAT, which is on average around 13%. But then once you export those finished goods, you'll be able to apply for a VAT rebate and get those 13% back. So you can imagine that how important that 13% is for the suppliers, because for many of them, that could be like the whole of their profit margin. So sometimes when buyers ask them, can I pay you in RMB? First, the supplier, they might not have the context and think, okay, so maybe the buyer has a local bank account in China and they want to make a domestic transfer in RMB. So obviously, if this is a local payment, they will lose their VAT refund and the suppliers wouldn't accept. And there are others that even if you clarify that I'm sending you RMB from overseas and it's on a cross-border basis, they're not clear whether they can get the VAT refund. So we can say here that this is actually a common misconception from the suppliers. As long as the RMB is received from outside China on a cross-border manner, you're able to access your VAT refund in the same way that you would do with any other foreign currency. And actually at ebury, we have specially put together some collateral in Chinese with a guideline on how you can do your VAT refund if you're receiving in RMB from abroad. Then suppliers, a lot of times they say, my bank is asking me for a lot of paperwork and for me it's very troublesome to switch to RMB. So this ties back to what I explained at the beginning on the internationalization of RMB. Since February this year, when the Chinese authorities guideline came into full effect, the banks have simplified quite a lot the paperwork that is required from the suppliers. So right now, it should be easier for them to directly receive overseas RMB through their bank. But something I need to add here is that because we have a specialist RMB team that helps our clients communicate with the suppliers when needed. So we always check with the suppliers if they have received cross-border RMB before. Because what happens is that sometimes the suppliers, they're like, okay, so I have a local RMB account. They'll directly give our client their local RMB account so that the client can pay RMB from overseas. But it doesn't work this way. Like if it is the first time that you receive RMB from overseas, you need to go once to your bank to explain the situation, and the bank would ask you to submit some documentation and fill out some form so that they are aware that from now on, not only you're going to be receiving USD or other foreign currency from overseas, but also you will receive RMB. Because otherwise, if there's no previous heads up to the bank and they suddenly see an RMB coming from overseas, depending on the relationship that the supplier has with the bank might directly reject the funds or just freeze the funds until the supplier submits further documentation. So in summary, the supplier doesn't need to open a new account, but they need to enable the cross-border functionality to receive RMB with their bank. Then another very common issue that we find are suppliers that are operating from an offshore account. So these are suppliers that might not have the export license. They're manufacturers, use trading companies, and they're using an offshore account, oftentimes in Hong Kong, to receive the money directly. Why in Hong Kong? Because Hong Kong has an open economy. There's no restriction on movement of funds. And also the corporate tax rates are much lower in Hong Kong than in China. So these suppliers, when they receive funds from Hong Kong, there are some restrictions from the banks to send directly RMB from Hong Kong to China. So effectively, even if from ebury will be able to pay on behalf of our client RMB from the UAE into Hong Kong, the suppliers would have difficulties to send that RMB directly from Hong Kong to China. So that's why we have developed a special product for these situations where actually the supplier is willing to provide prices in RMB that because of this reason or some other reason, they would rather keep receiving USD. Then we have this parallel forward product that gives them the flexibility to choose whether they want to receive RMB directly or USD directly. So I won't go into too much details here, but you can get in touch with any of our ebury representatives to get some more details about this. And this is basically all from my side.
Perfect. Great. I hope that was useful for everyone. And I know there's definitely a lot of information there. So what I would say is, if you are talking to someone already from our team, they will be happy to, or they will be following up after the webinar, just to get your feedback as well as, to see whether there's something imminent we can help you with. But I think at the end of the day, this gives you an idea of the things that we're trying to do as a business for the clients that we work with. Ultimately, we want to make sure that they have as much information as possible. And certainly from our experience, we've seen that, exactly as Isabel outlined, all of the help and knowledge that we have on the local market in China is not being shared by the local banks here in the UAE. Perfect. Thank you very much, Isabel. In terms of questions, so there's a couple of questions that had come through. It actually ties quite nicely to what Isabel was mentioning. One of the questions was, how do I see what I can save if I'm paying in CNY? So obviously this will vary, quite a lot, but the simplest way is what Isabel just touched on, is effectively, speaking to your supplier and asking them for 2 invoices, one in USD, one in CNY. And what our clients can do is they can see, okay, from dirhams, what is the total amount of dirhams to buy this amount of USD, and what is the total amount of dirhams to buy this amount of CNY with the rate that we can quote you. And the difference between those two is kind of a rough estimate of exactly what you can look at saving on the price of the goods. Now, this doesn't incorporate things like, the cost saving of hedging, for example, which Isabel touched on with the chart of USD CNY, but it does give you an indication. Now, the other thing to warn is, if you don't see a substantial saving, it doesn't mean that there is no benefit in paying in CNY, because really the biggest risk is the CNY fluctuations and the reactions that the supplier will make off the back of that. And that's where the strategy and the hedging element, comes out quite easily. So that was one of the questions there.
Yeah, so maybe Daumantas, I can take up the next question.
Yeah.
So there's another question about that I asked already my supplier for prices in dollar and RMB, but actually they came out the same. So let me also explain on this, because this is a situation that we find a lot with our clients as well, that the suppliers directly uses the current exchange rate and then give them the RMB. So I think in those cases, it's very important to deep dive into the mechanics of the suppliers with setting up the USD prices in the first place. Because every time that our team communicates to the supplier, we always try to get to the bottom of that, right? So where you converting your USD from base prices into RMB, then we want you to recalculate your RMB based on your cost. So what's your cost base in RMB? What's your profit margin? And then give us your original RMB prices. But there are times as well where actually the supplier would be adjusting the prices based on the exchange rate. So that means that every time that the client places an order with the supplier would say, okay, so the prices that I have in yuan, it's always 680, but depending on how the exchange rate fluctuates, I'll give the client a different USD prices. So in those cases, it's normal that you see the RMB and the USD prices are the same, because actually that's the exchange rate that the supplier used at the beginning to convert from RMB to USD. But I think the key are two. First, to make sure that the supplier is giving you their base prices in RMB. And then second, that those RMB prices, they're not going to be changing in the future, because we know that the USD prices are going to continue to change, but that the RMB price is going to keep stable from the FX side of things, right? Like then if there is some other factors like the increase in raw materials cost, that's something that we cannot avoid, right? But from the FX part, it should be kept stable. And this is something that our team in Hong Kong has been communicating extensively with the suppliers of our clients.
Yeah, perfect. Not to run over too much, we'll go through one more because it actually just came through now, and it's a really common question that we get quite a lot, and it relates to obviously the peg that goes between dirhams and USD. And the question is, how much sense does it make to pay in CNY if the supplier is not willing to reduce the price of the goods? So the real answer is that, if you, with the AED USD side, of course, there is no risk. And the risk really lies on the fact that if the USD CNY rate moves lower, as it has done, and the supplier is converting the USD into CNY, over that period, as the rates move lower and lower, the supplier will be receiving less and less renminbi from the same amount of dollars that you are paying. So what that tells us is they will likely increase the price. And as Isabel showed in the example, from 100 to 105, it's very likely that they will increase the price of the goods from CNY into dollar terms. Now, you paying in CNY yourself directly allows you to remove that risk of price increases, because ultimately what you will say to your supplier is, don't quote me the price for my goods in dollars, but quote it to me in CNY. And that means that you are going to agree, 600, 680, whatever the price is. And regardless of where that rate moves, that is going to be the cost. Now it is in your side, and this is where ebury can help to manage the risk of the rates moving against you, whether it's through hedging, market orders, etc. But the point is that clients should not be so focused on saving 1-2%, just because they are paying in local currency, but they should be focused on the moves that are happening between USD and CNY, because if that rate continues to move lower, as the forecast show that it will over the next couple of years, then it's very likely that if you continue to pay in USD, the supplier will increase the prices to reflect that. And with the supplier doing that, with the rigid bank offering, with hedging and things like that, it means that you're probably not going to be getting the best deal. Whereas with ebury, you're able to fix rates, you're able to get more competitive rates into CNY than the supplier may get on the ground. So, this is a really common question that we get quite a lot, because of course it seems simple to just pay in USD from AED. But that is really the main reason of why, it would be beneficial. Okay, I think, we're 5 minutes over, so we can wrap up the webinar. I hope it has been useful. As I said, if you have registered, we'll get our team to reach out with you. And if there's anything specific that you would like to speak to, do not hesitate to get in touch with us. Thanks a lot for your time, everyone, and hopefully look forward to seeing you for our next webinar. Thank you very much, Isabel.
Thank you all.
Goodbye.